Welcome back to Market Call. Now it's time for David Fingold's top picks. So David, throughout the show you've been talking about a number of names that you're waiting to see. So these are the ones you jump in on. So first up we have Schlumberger. Why did you choose this one?
Energy is reasserting itself after a very long period of underperformance, and I think everybody has noticed that the exploration and production companies and the integrated oil companies did well in 2021. But Schlumberger, as an energy services company, is actually only just past, I think it's their first quarter of growth. So to try to understand this, if you are one of the major oil companies and you want to replace your declines or you want to grow your production, you hire a company like Schlumberger to help you with services that could include drilling fluids, measuring well drilling, it could include pressure pumping, it could include seismic. These are literally the picks and shovels of discovering and developing oil and gas. And we've seen the companies recover, the clients, the major oil companies recover from how low oil prices were in 2020. Now they're increasing their capital budgets. They're trying to replace their declines and begin to grow a bit. So this is the next stage of the cycle. The baton is being passed to companies like Schlumberger. So it's what's next.
Okay, let's get to your next one in a completely different space, the healthcare space, AstraZeneca. Why did you choose this one?
It's a good company. Human pharmaceuticals as an industry are working. Healthcare is one of the three best performing industries of all time, and it took a break for a couple of years in 2020 and 2021. It's now starting to accelerate again. Astra has a great product pipeline, including some drugs that are very hard to make, like antibody drug conjugates. They have very few losses of exclusivity. They've got a solid balance sheet, a good dividend. It's a liquid stock. So it's a way to get involved in human pharmaceuticals in a large cap stock with an attractive valuation as the industry is now becoming more in favor out after being a couple of years out of favor. The other thing I'd say broadly about healthcare is that if there's further negative outcomes in the markets or in the economy, healthcare has outperformed every bear market. So it's defensive and it also has growth characteristics.
Okay, so energy, healthcare, and now insurance. Your last top pick is Allstate. What was behind this choice?
There's a firming price environment in personal lines. Insurance is also one of the more defensive parts of financial services. So you actually get to benefit from higher interest rates, but you don't have a long-term security portfolio or a mortgage portfolio, a whole loan portfolio getting impacted by higher interest rates. The firming price environment is as a result of frequency and severity because you've had an increase in miles driven as the lockdowns are now in the rearview mirror. You have a modestly inflationary environment, and anyone who's ever looked at their insurance bill knows that every year the amount covered gets increased by the rate of inflation, which means that over time your gross written premia are going to grow with the rate of inflation. Now, I'd caution people that in any given quarter, you might have higher losses than expected and need to raise prices in the subsequent quarter, but with patience, you benefit from an inflationary environment. They also recently disposed of their life insurance business, so it's now very focused, large cap dividend paying stock.
Okay, that of course is David Fingold. He is the Vice President and Senior Portfolio Manager with Dynamic Funds. He's been taking questions this entire hour on global and US stocks. So thanks so much to David.